Hey guys, welcome to the weekly Option Infinity strategy session for October 25th. Usual disclaimer, everything we discuss is for educational purposes only. Do your own research, yada, yada, yada. So this week we have a very busy week for earnings, and we're going to be looking at a few different things right now, but we'll start off with the economic calendar as usual. And we have this week, we're just going to go over the more important dates. So Thursday is GDP, as well as jobless claims. GDP is a big one I'll be looking at for Thursday. Friday, personal income, consumer spending, core inflation. So Thursday, Friday, busy days. Monday, Tuesday, Wednesday, not as important. I'm just going to skip right over to the EM and PM sheet, and we can look at earnings actually too. So if I look at the next tab over here, 1 second, I move this on my screen. There we go. So this week we have the busiest week of earnings season for the fourth quarter. So we have tomorrow, we have Hasbro prior to open, SAP. After close, we have Twilio, Chegg, Alphabet, NXP, F5 Networks. Tuesday, prior to market open, Pfizer, 3M, Caterpillar, Eli Lilly, Raytheon Technologies. Sherwin-Williams is one that I'm looking at closely, given that everyone is staying home and they're redoing their houses. A lot of people are buying paint right now. Actually, one of my friends is telling me that. So keep an eye on SHW. I actually pulled up the FinViz chart over here. You can see it. It's been consolidating around the 680 mark for the past roughly 2 months now. And I think that it should have a decent shot at 800 in short order. Obviously, the only issue with this is that there is poor liquidity on the option chain. So I'll pull that up right now. You guys can see. Here's the option chain, and the liquidity is pretty poor because there are only monthly contracts to be traded, and you can see the open interest is nil, volume is nil. So it's kind of hard to trade, unfortunately, and it's also a pricey stock. So for most people, they're going to want to avoid it, but I do think that it's a good investment longer term if you are willing to buy some stock and hang on to it, for a longer duration. That's all right. What else do we have? So if we go back to the earnings as well. So Tuesday, again, we have Novartis after hours, JetBlue, BP. After close, heavy hitters, Microsoft, AMD, First Solar, that's FSLR, Akamai Technologies. Akamai should do pretty well as well, given that they're very, very focused on cloud cloud traffic right now. All right. I haven't really lived on them too closely, but I've followed them for a while, and I do like them longer term as well. That's AKAM. Wednesday after close, Wednesday prior to market open, you have UPS, Boeing, General Electric, MasterCard, Sony, Anthem. After close, Fastly, Pinterest, Etsy, Gilead Pharmaceuticals, Teladoc, Visa, Ford, eBay, Livongo, and ServiceNow. So you have a really busy day on Wednesday, very, very busy. I expect UPS to do very well, as obviously everyone is staying home right now, ordering packages to their houses. They're not going to malls. So UPS is much busier than usual. Boeing, again, I'm not really too bullish on them, short or longer term. I think they're going to take a long time to recover. I would stay away from them. MasterCard and Visa should do decently, given that people are buying stuff online and obviously using their credit cards. And then you have Fastly, which fell from 115, 120 a couple of weeks ago down to 75-ish. That one is going to be a big mover, obviously. They lowered their guidance a few weeks ago, so that's probably baked into the price, but either way, I wouldn't really touch it myself. Pinterest, everyone saw Snapchat last week have their massive move. I'll pull up the chart on that actually so we can see it. Where is it? So here is Apple. I'm going to change to Pinterest. Oh, where's my chart? So I guess 1 sec, let me find that chart. So Snap. So you can see this massive move they had last week on an earnings beat. They went from 29, closed at 43, and they're actually at 44 after hours on Friday. So that was a massive move, right? You had a move of about, well, now it's about 55% in in about a week, right? And Pinterest could have a similar move to that as well. Obviously, Facebook and Google followed suit with them as well last week, as well as Twitter. And they report this week too, Facebook and Google too, right? So keep an eye on those names too. Let's go back to the earnings chart as well. Thursday, before market open, Shopify, Nokia, Twitter, Moderna, Spotify, Overstock.com, Kraft Heinz. After close, Apple, Amazon, Facebook, Activision, Starbucks, Vertex, Atlassian, which is ticker symbol TEAM, TEAM. So Thursday, also very busy, right? You have Apple, Amazon, Facebook. Those are three of the FANG man names, right? And Starbucks as well. I think they're actually doing pretty well. Starbucks. People are staying at home right now, and to get out of the house, they're going to Starbucks to grab a coffee. I'm seeing long lineups at the drive-thrus in my area almost every day when I drive past them. So take that for what it's worth. Friday, before market open, you have ExxonMobil, which I exited on, was it on Thursday or Friday last week? I actually exited my position there, so I'm no longer long Exxon anymore. I'm out of oil. Chevron, AbbVie, Honeywell, Altria, Under Armour, which we've been discussing a few times in chat the past few weeks, and they've had a nice run as well. And Charter Communications. So very busy week this week. Obviously, you're gonna have a lot of volatility in different sectors. If you're holding companies that have competitors reporting, keep in mind they will be affected by those reports. Last week, Intel had a terrible report, and AMD actually popped on that news. So we'll see how they do on Tuesday. I'm keeping an eye on Microsoft, AMD, Apple, and Amazon and Facebook this week. Those are my primary plays I'm looking at right now. I'm not actually positioned right now in anything, so I'll be making my trades as I see fit. But I also am going to be releasing a video on how to trade earnings using an example with Apple. So keep an eye out for that as well. Okay. And then we have the EM and PM sheet. Thank you very much to Frankie again as well. So the aforementioned earnings reporters this week, we have a lot of them. From last week, we actually had a bunch of names, and let me see the stats that Frank put up in chat. So EMs and PMs. So last week, 11 out of 36 tickers closed outside their range. Facebook, Google, Intel, LUV, Penn, RCL, Snap, Space, Spotify, Wayfair, and Win. Actually, Win also reports this week as well. I believe it's on Thursday too. I got to check that though. I think it's on Thursday. Let me see. Win is actually going to be on August 4th. So it would be, actually, no, it'll probably be next week then. So I misspoke. Either way, so going back to Discord, one sec. Change my screen here. 5 out of 36 tickers breached temporarily yet closed within their range. Adobe, Salesforce, PayPal, Shopify, and Zoom. And 14 out of 36 closed green. 22 out of 36 closed.
Can you put the chart back up?
Oh yeah, sure. Which chart? The one with, one sec.
The earnings.
The Snapchat chart? This one?
The earnings.
Oh, you mean, yeah. Okay, this one. Okay. Yeah. So one sec. It's hard to navigate with the Zoom thing on top of everything. Yeah, it's over here. So yeah, so this coming week we have Apple. Their expected move is about 648. Actually, it's about $7 now from when I looked last for my example that I'm going to do my video that I'm posting later on today. So the percentage change is 5.6% expected. Upper move would be 121.53. Lower move 108.57. Potential move is 8.68 or 7.5%. Upper move 124 almost, and lower move is 106 approximately. AMD is expected to have an 8.5% move, or almost $7 in one direction. So upper would be 88.91, lower 75.01. Potential move is 8.98, so 11%. Upper 90.94, lower 72.98. Amazon expected to have a 6.9% move. The potential move is 9%. So the upper potential move is 34.93, and the lower move is 29.16. Activision, you have a move of 7.6%. So that'll be an upper move of 87.21 and a lower move of 74.87. Obviously, Facebook is going to have a large move as well, possibly, given that Snapchat moved large last week, and also due to the election spending. I anticipate them having a great report. So their PM is 9.3%. Upper move would be to a new all-time high at 311.21. Lower move would be 258.37. Fastly, their PM is 15%, or $11.45. Lower move 64.77. Upper move 87.67. As I mentioned before, they did have a revision to the downside of guidance a couple of weeks ago, so I expect this report to have most of that information baked in. Wouldn't be surprised to see it kind of close flat on the week. Guild, who was approved last week for by the FDA for their remdesivir for coronavirus, they had a temporary pop on Friday and pulled back again. I expect a nice move on them as well. Their PM is 5.6%. Upper move 64.20. Lower move 57.38. Google PM for the week 6.7%. Closing, so the PM would have been 109.65. Upper move is, sorry, yeah, that's right, yeah. Upper move is 1750.98. Lower move is 1531.68. Then you have 3M over here. They have a PM of $9.24 or 5.4%. Upper PM is 179.05. Lower PM is 160.57. Microsoft has a PM in the same range as M as well. Their PM is 1164. Upper move 227.90 near all-time highs. Lower move 204.62. Penn Gaming has a PM of 14.5%. Upper move 71.91. Lower move 53.71. Pinterest has the largest PM of the week at 22.1% or $11.72. So the upper PM is 64.68 and the lower PM is 41.24. Then you have Royal Caribbean Cruise Lines reporting too. Their PM is 12.1%, upper PM 72.32, lower PM 56.66. Shopify has a PM of 10.5% or 107.95 on the week. Upper PM 11.34.23, lower PM 9.18.33. And then you have Spotify, last but not least, at 11.4%. Upper PM 315.80, lower PM 251.30. Right. So you have some heavy hitters over here. Oh, also we have Twilio and Twitter here too, and XOM. I'll post those too. Right. So Twilio, 11.3% PM. Upper move 342.11, lower move 270.09. Twitter PM for the week is 14.1%. Upper move is 57.7, lower move is 43.33. And keep in mind, they had a nice big move last week to the upside on Snapchat's report. So that may be baked in already in the earning report. And last but not least, XOM has a PM of 6.3%, or $2.14 in either direction. Upside 36.31, downside 32.03. I wouldn't be surprised to see them with the dividend cut and probably a drop down to like around 30. I wouldn't be surprised at all whatsoever. And then obviously someone asked about Zoom too earlier. So Zoom has a PM this week of 8.7% or $44.45. Upper PM is 555.97. Lower PM is 467.07. And I mentioned last week that Zoom is actually pretty overvalued. And you can see in this little chart over here in FinViz that they hit a nice high last week and they bounced off of it. So now they're at the 20-day moving average right here, right? So if they break below that, you can expect them to test out right around the 420 mark, right? And I do expect them to fall back down and probably fill this gap over here from late August, somewhere around $300 and what is this, like 320-ish? I do expect that to happen in the next few months because they are way overvalued right now. So yeah, that's pretty much it for the week. A lot to talk about, obviously. I am posting a video later on tonight, guys, on Apple's earnings and how to use that as a template for any earning report you want to play. I basically just outline how to find the EM and PM on a given stock, and then I outline a different strategy for different theses, or theses, if you will, right? So if you have a bullish strategy, a bearish strategy, how to play it neutrally, if you want to use like iron condors or iron butterflies, for example, I outline all those different strategies in the video. So keep an eye on that and give it a watch and let me know what you think about it as well. Omar wanted to share some ideas that he had as well this week, so I'm going to pass it along to him. Omar, are you ready to rock and roll?
Yeah, I'm ready. Can you hear me okay?
Yeah. Okay,
Awesome.
I'm going to pass the video over to you. So guys, Omar is one of my good friends and also one of my students as well. And he has an idea he wants to discuss and perhaps get some feedback from you guys too. So I'm going to pass the recorder over to him, or the Zoom over to him. So I'm going to make him host.
Yeah, thank you, Nick. It's not much of an options idea. It's more so of a macro investing idea, but I still want to share it with you guys and get your opinion, just because I'm treading in water that I've never treaded in before, and I've been listening to, like a whole bunch of different people. I don't know if you guys have heard of like Stephen Van Meter or Dr. Lacey Hunt and their perspectives on the economy, but I have an idea. I want to share it with the group and basically see if you guys can poke any holes in it and see if you guys, have followed a path that's similar, or maybe, can share your insights, because, I'm ready to basically take the next step with this thing. And I want to see if I'm going down the right direction, or if I have something that's flawed. So I want to just throw it out there, see what you guys think. But like the way that I'll like sort of share this perspective, starts with the premise of interest rates are going to continue to go down. So I know there's like a lot of different opinions out there with regards to interest rates, whether they're going to go up or go down. From this perspective, the statement here is that they're going to continue to go down. And the reason why is because there's not enough lending happening in the economy. So right now there's a big contraction happening with the banks, whether it's commercial, real estate, et cetera, the way you break it down, with all those different line items with regards to the Fed, and the way they're interacting with the banks, basically showcases a big contraction happening in the economy right now. And the banks can't get rid of their cash. So, like if you take an example of a bank, if you're in Toronto here, you got your TD Bank, you got your CIBC. And let's say, for example, they got like a 5% interest rate, with prime and all that good stuff, it ends up being like 5%. And, they got 15, let's say, for example, a section of the bank's got $15 million, and the manager comes up to the managers, or the manager comes up to his employees and says, you know what, I need you guys to get rid of this $15 million. And they just can't get rid of it. At 5%. So, what are they forced to do? They're basically forced to lower their interest rates. It's a very simplistic way of looking at it, I understand. But at the end of the day, if the banks can't get rid of the cash, what they need to do is lower their interest rates. So what I'll do is I'll just share sort of where I'm getting this information from. If I just...
Sure. I'm going to give you the host again as well right now, so you have it. One sec. Host. All right, you're another host right now. I'm going to stop sharing my screen.
Like straight from the Fed's website, right? Like assets and liabilities of commercial banks in the US. You can see here that when you're looking at bank credit, there's a little bit of an expansion here, but all of a sudden it's contracting. Which is telling you basically like banks and financial institutions can get rid of like, for example, mortgage-backed securities, loans and leases, commercial real estate, et cetera, as you go down these different line items. What we're noticing is major contractions in the US economy. So having said all that, if interest rates based on this thesis are going to go down, An interesting thing to look at is the TLT, 20 plus year treasury bond ETF. Basically, as interest rates go down, this baby here pops. And so what I wanted to do was, number one, like share this perspective with the group and see like, what do you guys think about interest rates dropping and bonds going up? And number two, has anybody bought bonds, and what does that sort of look like from a transactional perspective? Can you just do that in a regular account, or is it a little bit more complicated than that?
Yeah, interesting insight, man. I'm not too sure myself. I haven't bought any bonds myself, so I won't be the best person to speak to, but I do know people that have. I can talk to them and ask them. If anyone in the group has purchased bonds in the past, they can obviously chime in and share. James Taylor just puts me in chat. Let's see what he said. He said a little bit more complicated than that. So, James, if you want to elaborate at all on that, by all means.
Yeah.
Oh, you can send an email. Yeah. Okay. Yeah, that'll be fun. Obviously, yeah. I've done a little bit of reading as well myself, and if you follow the KRE index, which is the regional banks index as well, that's been performing pretty well right now in the U.S. It's been outperforming the past month or so. So we'll keep an eye on that and see what happens with that.
Now, is James saying that the thesis is more complicated, or the purchase is a little bit more complicated?
The transaction.
Gotcha. So you can't just go and basically purchase directly from the market like you would a regular stock. Gotcha.
Yep, good information, James. Appreciate that. Yeah, if you wouldn't mind sending an email, that'd be great. Perhaps you can exchange information with Omar if you'd like. And
yeah, I'll provide you my email.
Oh yeah, you have my email as well, right? Nick@optionfinity.com. So Omar just shared his too. If you wouldn't mind sending it to him too, he'd probably appreciate that. Yeah, that'd be great, man. But yeah, otherwise, no, Omar, like interesting ideas for sure. And Lacey Hunt is an interesting person as well. I think he has a was it him? Was it a website? What was it called? That website I was looking at. Put the name of it. It wasn't Lacey Hunt, though, I'm pretty sure. No, it's not. No. Yeah. No, it's not. But yeah, either way, definitely some good ideation right there. And I'm not really sure how I would play that, but I can pass that information along to some of my contacts and see what they would say as well. And obviously, if James has information on that too and he wants to share it, by all means, that'd be great.
Yeah, I'm interested to get people's perspective on that. I know right now, basically the biggest short position has been set up on the 30-year treasury bond. Mm-hmm. It's at record highs, and basically hasn't even budged. So once those short sellers are forced to buy and it sort of gets unwound, from what I understand, certain assets, like for example your TLT, are just going to spring up like crazy. This is what I've heard. The research sort of reinforces it, but definitely want to see sort of, if there's any holes in that line of thinking.
Yeah, for sure. James just posted, you can buy government-backed bonds from treasurydirect.gov, apparently. Mm-hmm. Yeah, and I was looking at an email that I have, and someone sent me talking about the spread on the 5 and 30 yield curve, and it's at its highest level right now that it's been, I think, ever, if I'm not mistaken, if I'm reading this correctly. Apparently, it's making.
How do bonds work when it comes to getting paid? Like, how do they grow exactly?
Well, bonds typically pay out coupon payments, right? So, semi-annually, right? Usually, so every 6 months or so. There are different bonds, obviously, they can pay in different increments of time. I myself have never purchased bonds, so I'm not really too sure. That's not really my area of expertise, so I can't really help you there. But
so you invest in bonds and you just semi-annually get lumps of payment. What you're saying?
Yeah, if I remember correctly from university, So bonds have inverse correlations with interest rates. So the lower the rate, the higher the bond, the face value of the bond. And so essentially you pay a higher premium for the bond, if I'm not mistaken, if the rates are lower, and you pay or is that right? And you pay a lower premium if rates are higher. And then what happens is that you buy a bond at whatever it's trading at, and at maturity you get back the face value of the bond. So it's $1,000 usually for each bond. Plus you get your coupon payment of whatever it is. If it's 2% per year, then you get, like $10. What would it be, I guess? Yeah, it'd be $10 every 6 months, basically, right? Until the coupon matures. Until the bond matures, and then at that point in time, you get your money back, right? But again, I've never purchased a bond myself, so take it with a grain of salt. What I'm saying.
My father has bonds. He was complaining that when Corona first hit, that his bonds were like shit, went to shit or something. I don't know if they recover now or.
Yeah, I'm not too sure, but with yields so low right now, I guess the issue would be that yields dropped. So anyone holding bonds that had higher yields prior, I'm not sure if those are drop in value now or not. I've only kept an eye on them at all. So again, I can't really speak too informatively on those topics, right?
Yeah.
But either way, interesting topics to discuss for sure. And James, appreciate your input for sure. He said, think of it like a low risk option, which is I guess a way of looking at in that regard. But whatever you guys figure.
I think the overall sentiment in the market right now, majority sentiment, is that interest rates are going to go up. I'm not sure what you guys think about that, but I think there's a big short position set up in a lot of these bonds. Basically, there's a lot of short sellers out there saying that interest rates are going to go up,
Mm-hmm.
and it's going to be an opportunity to make some money on these bonds. Basically, there's an inverse relationship, like we were alluding to before. So it'd be interesting to see what happens, I guess.
Yeah, well, my opinion is that longer term we're going to see, inflation, and I think we're already seeing inflation, but the conventional metrics aren't displaying it. So, you're going to see the Fed come out and say that inflation is rising too fast. And again, with their average inflation targeting, which they set as a new mandate, that could mean that we could have years of 3% or 4% inflation sometimes, right? Perhaps, and if it gets out of control, that would be where the Fed would be forced into raising rates. Otherwise, either you have a dollar that's just going to plummet in value, or you're going to have the market stay up, and if you want to appease the market, you're going to have a devalued dollar, which causes the market to rocket in value, but you're going to have hyperinflation too, right? So that's why a lot of people are saying, buy Bitcoin, buy gold, buy silver. I do agree with the buy gold and buy silver, obviously, and Bitcoin has been rallying of late too. But at the same time, what I'm seeing right now with a lot of people, telling me that they're selling off all their assets and buying everything in Bitcoin, that to me is kind of a sign of a bubble as well, right? And I could be wrong, obviously, but if you are going to speculate in those kind of assets, like do so with a smaller percentage of your portfolio. Like I know people that are putting their entire net worth into Bitcoin, and they might be right. Who knows, right? But again, I'm not willing to risk my entire net worth on a speculative asset like Bitcoin, for example, right? So. If it's 5% Bitcoin, fine, whatever. Worst case scenario, you lose 5% of your assets, and assuming that Bitcoin goes to zero, right? Which is, it could happen, but also it might be improbable, right? If you do, 5% Bitcoin, 10% gold, for example, like 5% silver, and then you do the rest in the markets, right? You might be, well balanced, obviously, depending on what you're investing in the stock market, right? But yeah, going all in Bitcoin, like I've seen a lot of people do of late, especially in the last couple of weeks, as it's risen higher and higher. Like, why would you buy an asset when it's appreciated in value, but 25% or so in the last couple of months, right? And last week, PayPal actually is announced they're gonna start allowing their merchants to purchase Bitcoin on their platform, essentially making Bitcoin, PayPal, a mobile wallet for Bitcoin, right? Now, the interesting thing there is that you won't be able to actually remove it from the platform. You can just buy and sell it. So you can't actually take it off the platform yourself. PayPal would be the custodian of the Bitcoin. And for example, if you get paid, in USD through your shop on PayPal, you can take that money if you wanted to and buy Bitcoin on the platform itself, hang on to it there and trade it essentially if you wanted to, right? Which is kind of an interesting idea from people's perspective. I'm assuming they're going to make money on spreads there, right? So they might sell you the Bitcoin, higher than spot price, well above spot price, and then if you want to sell it, for example, they'll give you, well below spot price, right? So yeah, it's I don't know, it's kind of crazy to think that we're talking about people that are putting their entire net worth into Bitcoin at this stage when it's a very speculative asset, right? You could have it crash and burn, you could have it pop, who knows, right?
Yeah. No, I'll just comment because I guess I've been talking a little bit now, so I'm getting a little comfortable here. But I have friends that have told me that they've put majority of their savings into Bitcoin. So I totally agree with that. It's happening. There's speculating hard. There's a lot of speculation happening right now in the market.
A lot of speculation, yeah, and it's dangerous, right? Because just like wheat stocks. And then before that, there were solar stocks, and crypto a few years ago, you had Bitcoin pop to like 20K all of a sudden, and then plummet back down again. We've already seen that Bitcoin doesn't make a great hedge, right? Back in the market crash in March, it underperformed the remaining asset classes. It underperformed gold, and underperformed silver, and the broad market itself as well, right? So, yeah, James made a good point there, right? He said all it takes is a solar flare to wipe out all that Bitcoin. Obviously, again, one of those events that has a lower probability of occurring, but kind of funny to think about. Not funny for people that are holding Bitcoin, obviously, right? So yeah, but seeing the last few weeks, where Square's purchased some Bitcoin, and you saw, Paul Tudor Jones buy Bitcoin as well. Keep in mind, these corporations are buying, small amounts of assets relative to their overall assets, right? So they're putting, 2% or whatever, 3% or 5% of their assets into Bitcoin. That's just a hedge for them, right? In the event that they're correct, they make a lot of money, right? If they're wrong, big deal. They lost 5% or 2.5% or whatever it is, or 3%, right? It's not a huge bet as people are making it out to be. But a lot of people that are the Bitcoin hodlers, so to speak, right? They're super obsessed with just watching it go higher and higher and higher, and not understanding that, like if you're operating in an echo chamber where everyone else around you is saying the same thing, that it's going to go up and up and up, you're not really listening to reason or opposing views that may be beneficial to listen to, and you're not hedging yourself, right? So again, who knows? It might work out for them. Obviously, I hope it does. But at the same time, if Bitcoin is $1 million per coin, that probably means that we have some kind of serious calamity in terms of the U.S. dollar and the rest of the global markets as well, right? So that might not bode well for other asset classes, right? Either way, anyone have any questions at all before we wrap up?
Yeah, I got a question. So essentially, like looking at Etsy, like joining the S&P 500 recently, and this is like their first earning report since joining the S&P 500. Do you think that has any kind of thing that contributes to a quick pop in the stock price, or is that just you don't really worry about that?
So for Etsy, one second, let me just get the screen back from Omar. I'll pull up the chart and we can look at it if you want. Omar, you there?
Yep, I'm here.
You just passed me the moderation abilities.
Jeez, how do I? Where's that button?
You got to go to my name and then right click or go to more and then go to make host, I guess.
Well, you really gave me all of the power here.
Yep, give you all the power. You do whatever you want. Yeah.
I guess to refine my question, they have the expectation they should do better since they're now in the S&P 500. Is that a fallacy, or is that a logical thing of looking at Etsy?
Well, let's pull up the chart right here and look at Etsy as a whole, right? So I haven't looked at them too much. I watched them back when they were trading at like $20 a share, but they've taken off since then, obviously, and they're at 140 or so. If we just analyze it on the basics, right? So market cap, everyone can see my screen right now? Yeah.
Yeah.
So market cap is 16.2 billion. Net income, which is a profit, 150 million. Sales, 1.12 billion. Price to sales 14.42, a bit high. Price to earnings ratio 120, forward PE 65. Again, in this kind of market, valuations get thrown out of whack because of cheap money. So, but with people staying home right now, I know one of the guys in the group, his girlfriend actually does Etsy shirts, and she does pretty well for herself. She's been seeing a big boom in business over the last few months. So I mean, that's obviously an anecdote, but I wouldn't doubt if people are creating more items on their own and selling them online too. Actually, no, I know two guys in our group that are doing it. One person is selling hunting knives, and one person is or at least he's looking into selling hunting knives on Etsy as well. And one person is selling t-shirts, right? So yeah, they're at 137.85 right now. Let me check the option chain and see what's going on with it's like Etsy. So I'm looking at their moving averages too. Etsy. Okay, I'm changing my screen one sec. So if you look at the SMA, just see, and then I'm going to do the 50-day SMA and the 200-day SMA as well. So here you go. 50 as well. Okay, apply. All right, so we have the orange line, or this top line is the 9 SMA, so they're below that right now. Then you have the purple line, which it's just above, and then you have the blue line, which is the 200 SMA as well. So that one is the heavy support right here at like 115. 135 area, it's right at the 50 SMA right now too, right? So I think it could break above or break below, right? Again, I'm not playing it myself. I haven't looked at it too much whatsoever, so I can't really speak too informatively on it. But if I look at the option chain on it, where's the option chain? One sec. Etsy.
I guess take Etsy out of the equation. Just in general, when a company joins the S&P 500, like do they have that? Let's say they don't perform to expectations. Do they have a bigger percentage of like moving either way? Like, is it they're expected to do better now since they're in the S&P 500? I guess that's a better.
So what happens is that when they join the S&P 500, funds are forced to buy them as part of their allocation for S&P, right? So they're forced to buy a small percentage in them, but given that it's a smaller cap company, that'd be a very, very small percentage, right? So I wouldn't see that as being too influential on the stock price itself.
Okay, no, that's the answer I was looking for. All right, cool.
Yeah, like for the week ahead. So, if you look at the EM and PM for the week, so it was 138.50-ish. I think Frank already priced them out, I'm pretty sure, on Etsy. Did he do it for Etsy?
Yeah, he did. Yeah.
Yeah. So, actually, wait, no, he didn't. Let me see one sec. So, okay, yeah. So for Etsy, 138.50 or so. So the EM is about $16 in one direction. So upside would be around 154, and downside would be around 122 or so, right, for the week. So yeah, liquidity isn't great. You have decent sized spreads, so you're gonna incur a fair bit of slippage on any trades you take on Etsy as well. I prefer to watch stocks like this and like wait for them to make their moves and then trade them after the event itself, right? Because usually you get a lot of volume in the option chain after the event happens, right? So I might just watch it and see what happens after, because they report on, what is it, on Tuesday, I think it was?
Yeah, Tuesday.
Yeah, Tuesday, right? So yeah.
Okay, yeah, thank you.
Oh no, sorry, it was Wednesday. It was Wednesday after close, yeah. Yeah, no problem, James, yeah. All right, guys, any more questions at all before we wrap up? Alrighty, sweet. Well, I appreciate your time, and hopefully you guys learned something today. If you have any questions, fire me off an email, and we'll chat tomorrow, guys. Have a good night. No problem, Ernesto. Take care, man.